Okay, thank you everyone for participating and for coming. My name is John Sluice. Most of you probably know me already. If not, again, John Sluice, working here with Entrust CPA. On this call as well, we have Jeff Wood, also here with Entrust CPA. Most of you will know either Jeff or myself. We're the principals here at Entrust CPA. We've also asked Andrew Nichols to join us. Those of you that are working with integrated payrolls or payroll side of things, we'll definitely know Andrew. He's the all that is wise and sage when it comes to payroll. And so we've asked him to be on the call as well. We've also opened this up to integrated payroll clients. So thank you for joining us. I might refer to a conference that we had last week that is available on the website. So for anyone, feel free to go and join that. A few housekeeping items. You'll note inside of the Zoom meeting, there is a question and answer section in a chat. Please feel free to ask questions and to chat throughout that. It will help us as we go through this. Jeff is pretty much going to exclusively spend time answering questions as we go through. Andrew's going to bounce back and forth, and I'm going to look to present more of the information. Just know when you do push out to the Q&A into the chat, your name will become visible to others. So just be aware of that. The Q&A will go through and not be public until we answer it. The chat is public as soon as you send it. So both methods work to communicate and get us information and questions, but just know that there's differences between the two. Okay, I'm going to read the following. My advisor said I have to read this. So the information on this webinar is general information and should not be viewed as accurate or in your individual situation or circumstance. We recommend that if you have a question on your individual situation, that you follow up or either with us, your specific accountant, or an attorney. Please also understand that the information that we're providing is extremely fluid, is changing on a daily basis, and is often getting superseded. What we present here today may very likely be irrelevant or incorrect tomorrow. As such, please know that this is only accurate as of today and certainly not going forward, and that even as of today, the information is only our best understanding based on how we have interpreted or read information. We're doing our best to get you the information as quickly as possible and as accurately as possible, but please give us that, that tolerance. I know in this case, I know this is also a chance here to take the opportunity to talk about labor attorneys. I'd like to believe that every one of you has a labor attorney in your back pocket and has frequently consulted them throughout the weeks through this process. I wish that were the case, but this is a good opportunity to reach out and find one. If you don't, we can give you recommendations of labor attorneys that are out there both locally and nationally, but specifically locally. There are several great ones in town here. If you have one, I'm hopefully that you've already communicated and talked with them. What we're going to present here is important that you've talked through with them, think through with them, and there are a lot of new implications that you need to be thinking about. I don't think what we're talking about today was ever planned on or thought about up until of recent. And so it's important to have those advisors that you can call on and seek for assistance. Okay. Another caveat, I guess, or point here as I start going through is who we're viewing the audience here. So we are speaking with business owners and key management individuals on this call. So even if you're self-employed or you're the company's only employee, I'm wanting you to think of yourself and put on the hat of the employer today. There's the employer hat and the employee hat. Think of yourself in the employer hat. And in that context, throughout today's discussion, one of the key principles to keep in mind is do what is right for the long-term success of the business. I can't tell you the number of countless owners who I've talked to that are concerned about their employees and what this is going to mean for them. It's both commendable and wise to think that. After all, your business wouldn't be what it is today without these employees. However, your employees want a business to come back to. If you're too generous now, doing what you think is the right thing for an employee, and it later comes to put the business in financial jeopardy, what have you gained? So again, please put on the hat as the business owner who is thinking and doing what is right for the long-term success of the business. You'll find that comes in handy as you evaluate all these different discussions, whether it's coming from bonuses, paid time off, sick leave, vacations, laying people off, loans, whatever it is, consider what's the long-term success of the business. And then that brings me to the next concept is while we put what put our economy in this situation, so the virus, was not planned. But what we're feeling today was anticipated. What you felt yesterday regarding to potentially have lay employees off, or hopefully not, as a result of the stay safe, stay home, or stay home, stay safe, or even before that, it may not have been planned several months ago, but it was anticipated by the government several weeks ago. The biggest part of this, of the phase 2 stimulus, was funding money between the states for unemployment. The government saw this coming. The Federal Reserve is issuing tranche after tranche of funds to banks and lending institutions, anticipating the need for disaster relief. We'll get to that later. But unlike in 2008 and other downturns where the result was not anticipated, the government pushed the stop button on this. And they didn't do it without thinking of the consequences. I'm sure we will all armchair quarterback whether it's the right choice and was it done too soon, too much, too late, too early. But what I can guarantee is there are a lot of smarter people than you and I that have put thought into this. They've thought through what's going to happen and what we're feeling with today. So keep that as solace as you go through and make these decisions, that the mechanisms are out there and are in place. These mechanisms are what we're going to talk about. Some of them are what we're going to talk about today on this call. But we're still figuring these out and we're still trying to understand them, but the mechanisms are there. There will be business fallout. There will be businesses that don't make it through this. Many will make it through. And it's important to remember that all businesses, this is a worldwide and a US-wide response. All businesses, all employees, all people are going through this and going through it together. That helps when trying to determine payments on things or loans or unemployment, that we're all going through this together. I can't stress that enough. And that brings me to my final last point before we start on some of the details. The programs that are out there are different for federal and state. It's important to ask yourself when you're thinking of a specific guideline or a specific mandate or a specific credit or incentive or program, where is it coming from? Is it federal? Is it state? And even within that, is it the Department of Labor? Is it the Treasury? Is it the FDIC? Who is it? If it's in the state, is it the unemployment? Is it the state regulatory? Is it the reporting requirements? Where is it that you're thinking about what is the specific credit or program that we're working on? What we're going to talk about today has both. There's state and federal. So understanding where and thinking through what it is that we're talking about at a given point is important, because they're often, while they are, we'd like to think they go together well, they can be contradictory and they can overlap, but they can go against each other. So really understanding what program you're thinking about and why you're thinking about it is going to be important. Okay, so with all those fun things set aside, just a few detailed items here that we're going to talk through and kind of address. Many of you participated in the call last week. It seems like only a few days ago, and it seems like an eternity ago that when we talked, but it's amazing the information that has come out from that since that point. A couple updates as it relates to the CPA world of things. There has been further guidance on the deadlines and extensions that came out. So as of today, the federal government, the Treasury, has issued that the income tax deadline, so that's the individuals and businesses, has been extended from April 15th to July 15th. So it's a 90-day extension. That's for income taxes that were owed for 2019. It's also for the payment of those taxes that are due. It is also for the payment for the 2020 first quarter. So those got all pushed to the July 15th deadline. For those that are detailed in the audience, I would say there is an ambiguous June 15th second quarter estimate, which is ironically, as of right now, due before now the first quarter estimate. We don't have guidance on that, but that we would anticipate will come out as well. Highlighting what I mentioned before about the differences between federal and state, as of today, the state of Michigan has not come out with an extension on the 2019 income tax. We anticipate that they will, but they have not come out with it yet. So please be aware of that, so that even though the federal guidelines have issued an extension, the state has not. Within the context of those extensions, it's important to know that many individuals get refunds. So we still recommend getting the taxes in to get prepared. That brings up a point here regarding us at Entrust CPA. We are still trying to figure out what this mandate means, just like all of you. We are working remote. We're figuring out things and how things are going to come to us, how we're going to work through them. We are still working. We have our staff working remotely, and we are working through things. I would say as of right now, please continue to send your information, ideally in electronically, and then secondarily via mail. Call your individual accountant specifically to figure out what the best way to get information is here, because they are all working remote. So coordinate with who you normally work with for that. I'm going to speak a little bit right now on disaster loans. I'm jumping to that first because I think it's going to be a smaller part of what we're talking about, but something that's going to be important for the longer term. These disaster loans are going to be critical for longer range. Interesting enough, they are not immediate and emergency things right here. We are thinking of them right now, but know that they're not going to be put in place for a while because it's going to take process to work through. And so a couple things to think of as it relates to disaster loans and cash flow management here. The most likely one that you're going to go to as an employer and as a business will be the direct SBA loan. That's the funding mechanism that both the stimulus phase 2 and likely the phase 3 is going to point to. We're still learning of the new programs, but the program that's out there now is the direct SBA disaster loan. That was opened up to all Michigan businesses last week by the state of Michigan. It's through the SBA, it's the federal SBA, and there's a direct loan. So where you're going to do that is right on the SBA website. There's no super secret portal anywhere that if you talk to someone else, it's right through the SBA website. Go there, it's going to be the most effective one. It's going to be a pain. It's going to shut down. It's going to crash. I've been told that from many bankers and financial individuals that they're seeing that experience. I've talked to people that are applying through it. They're feeling it. It's not going to be fun, but it's something that if you are interested in doing it, we recommend. Speaking to those that are with Entrust clients, if you need numbers that go behind that, let us know. We're here to provide those. A lot of you already have financial statements for the December year end. Use those numbers where applicable. Ask us, call us. We can help you through that process. That's what we're here for. The second phase, or the second part for the disaster loans, are going to be directly with the bank. So first is directly with the SBA. Second is with the bank. Talk to your banker that you work with. Those are going to be the short-term cash flow lines. They're federally backed, but worked through by the bank. Those are going to take longer to go through the application process, but probably going to be a little bit more face-to-face with your banker. The key here, I can't understate this, is communicate, communicate, communicate. They have programs that are available. Again, this was an anticipated pause. The banks have the funding behind them. Talk to the banker, talk to what you're needing, talk to who you work with there, and anticipate and think through what are going to be the cash flow needs. Talk with us to figure out and formulate how you're going to respond. Talk to the banker to figure out how you are planning on responding. Again, I'm going to remind everybody is in this together, and so we can all work through this. Okay, now I'm going to take a pause. Andrew or Jeff, do you have any thoughts to say before I jump into the next topic?
Nope.
Okay. Oh, very good. And again, I'm going to apologize if it gets pinged or bounced around on who you're seeing here. we're still learning this as well. So now I'm going to jump into the stay safe, stay home or requirement that went out yesterday. That's what most people are feeling as business owners right now and asking questions on. We're partly just delving these seminars, which we're hopefully going to make a little bit more regular, is really based on questions that we're getting from clients that we're seeing that are coming. So we're anticipating that this is probably what you're asking, the same things. So the biggest one that we're dealing with right now is that stay safe, stay home. That just came out yesterday. We're still trying to figure things out for that. Again, I'm going to highlight, here's where you should talk to your attorney for your specific case. A lot of what I'm going to cover in here relates to attorney or relates to employee considerations. I'm going to talk to the financial side of it, but just know that you got to think on that side of things. Trade associations are also providing great advice. This is going to get into whether or not you are critical or not critical. Work through that. I would tell you the governor referenced and deferred a final conclusion from her point of view, or for the state of Michigan's point of view, and deferred over to the essential critical infrastructure that was in place as defined under the federal government. We will put that on our website. It's out on the state's websites. That's a great spot to go to for guidance, is michigan.gov/coronavirus. That's out there. We have it on our website, entrustcpa.us/coronavirus, that are going to have those where you can find out whether you're essential or critical. When you're looking at that, the core to understand that is it necessary to sustain life or protect life? That's the fundamental thing that they're asking the business owners to look through and think through. And they're asking the challenge, is it within that? So push yourself to say, is the business really necessary to sustain or protect life? Even if you fit under that category, the push and the requirements are that you still try to do all things possible to work remotely. So even if you are considered necessary to sustain or protect life, can you work remotely? If you aren't necessary, can you work remotely? Try to follow those and get those home and get people home. There is a further step. So after the necessary to sustain or protect life is conduct minimum basic operations. That's where a lot of people are going to follow and try to get underneath, or not necessarily get underneath, but look to qualify under so that we can continue or you can continue under normal business. That's where you're going to have to talk on your specific case, whether it's construction, whether it's service trade, whether it's manufacturing, whether it's distribution. Talk to your trade, make the conclusions, talk to the attorneys as to whether or not you qualify for those. An important factor, though, and why this is going to come up now versus others is it will determine several next steps of how and what you qualify from a disaster and from a credit point of view. So a big shift here that happened yesterday is the shift that now many businesses are going to qualify under requirements that the employee is subject to a federal, state, or local quarantine or isolation order related to COVID-19. You'll notice the number one reason for some of these other criterions, it's now been state mandated. And so that's something to consider and to think through, that it stepped up yesterday as to what's going on here. Andrew, do you want to comment anything on that or no?
You touched on it, excuse me, just the important distinction of within a business, what roles could be considered essential or not. That's something that's come up, and you just spoke to it.
Okay, so the first step is looking at, is the business essential? And then even if a business is essential, there are certain roles within that business that may be business or essential or not. So you got to look at it both at a business level and an employee by employee level. And then within those, some of the employees that you think might not be are, because they are there to sustain and conduct minimum basic operations. So you could have a non-essential business, but someone that is essential because they're conducting business. Let's say continuing to bill. So the Treasury also wants to push out that the business continues on. And so having someone there to do some invoicing may be considered as a conduct minimum basic operations. Again, talk to your attorney, talk to your trade guidance. and figure it out. But no matter what, the goal is to have as little as possible. But the default assumption is that you stay home. So that brings into what the logical and the next step, which is going to be unemployment. As you've evaluated and looked through your particular business case, you likely already have made decisions as to whether it's critical or not and what the impact is going to come on. Many of you on this call are going to feel the requirement here to stay home is going to shut down or shutter your business. And that's what you're faced with right now. And you're faced with as either the owner or key management is, do we lay off employees? Do we provide sick benefits? Which benefit are we providing? How are we providing? I'm going to refer back to my intro discussion is do what's right for the company. When looking at it, unemployment is there for a reason. It's there to facilitate for the employees and the payments of funds. My thoughts on this, and they're only my thoughts, is to when it's close or when you don't know, go to unemployment. Seek counsel on this, but default to the unemployment because that is what it's there for. What you're doing with unemployment is you're severing the relationship and you're saying, okay, as a business, there is no longer the financial ability or need for this group or employee to be there because of lack of business. And so now it's shifting that over to the government and letting them take care of that. That's what they're there for. That's what they're trained for. So you do what you do well, which is your particular business and your particular industry. Let them do what they which is trying to figure out how do they get these employees paid. Due to the mandate, it's our understanding that if it's required that they stay home, the unemployment won't be charged against the company's account. Again, this is just our understanding. It's not clear guidance yet. It was provided as guidance that said, I'm going to use the example of where it came from, which is the restaurant industry. So before the stay home, stay safe mandate, the restaurant industry was told to stay home and to shut down. When that happened, the state of Michigan said that as a restaurant employer, if you lay your employees off, you will not be charged for the cost and the impact of the unemployment on your account. They haven't come out and said it yet, but if you logic provides forwards, and I'm going to caveat with, we all know logic doesn't always apply, but logic would tell you that, or precedence would tell you that's going to work forward into other accounts and that you individually or your business will potentially not be charged for the cost of this. Again, I'm going to refer back to, you should think about what's the best for long-term considerations for your company, not necessarily what the cost impact is. That's what unemployment is for. But that is a question that has come up on a regular basis. So I'm going to repeat it here. It is our understanding it's our understanding that if it's a required mandate to stay home, that the state of Michigan will not be charging through to their employer cost in impacting rates. That's different if you are not required to stay home. There's an instance where you may not want to be considered critical. So keep those in mind. That just a lot of employers just assume they wanted to be treated as critical. There are reasons why, there are benefits, I guess, of why not being considered critical. Process for laying off employees. Some of you haven't been through this. We are not experts on it, but what we are seeing, just a couple thoughts on it. Have your employees go to the state website and utilize that. That's what it's there for. It's you saying that you're making the business decision that they're not, the work is not there. Now they go to them and go and figure that out. So they're going to go to the state website. That's the best spot to go. As an employer, I would suggest that you make it as a temporary layoff. But you're not saying it's a permanent layoff, it's a temporary layoff. One thing the state did come out and indicate is that you're not being required as the employer to indicate the date that was the leave started or anticipated time back. The anticipated time back was a key one that used to be out there. That has now been, that requirement has been, as of our understanding, has been lifted. It is also our understanding that the requirement to seek work by the unemployed is also being waived. And so during this period here, my understanding is you don't have to worry that they're out looking for other jobs that they may, but that the requirement that they do is being waived. Some practical numbers on it. The max of unemployment is $362 per week. And so if an employee made less than that, it equates out to just over $18,000 a year. So if the employee made less than that, they will be getting fully compensated for their, based on their historical payments in. If they make more than that, the most that they're going to make is $362 per week. It is based on, unemployment is a weekly type of pay. Something to note as an employer is you don't need to do anything up front to provide those historical wages. That's something that you do every time that you submit payroll, either through the state websites, or for if you're an integrated client, we do it on behalf of you through the filings that are going on. That is what's already happened. And so the state has all the information that they need to determine the amounts that are going to be due or that are going to be paid for the employee. Question that's come up quite often recently here is vacations and benefits that have been earned. Talk with your attorney. That's the starting. Our understanding is that it follows under an earned statute, and that's going to follow what's going to follow is the company policy that deals with termination. Unemployment is likely a termination. So if your policy says that sick or that vacation is paid at termination, then it likely should be paid. If the policy says that vacation is not paid out at termination, then it may not be paid out. So talk to your attorney. If the policy is mute, it's going to go by historical. What did you used to do? What do you tend to do? But again, talk to your attorney. You noted a theme there. What you need to hear from that, though, is that a layoff is a termination, even if it's a temporary layoff. So you got to consider the vacation. Bonuses, outside payments, support. As a business, you're indicating that you're not currently earning dollars. Any benefits that you provide to your employee are going to decrease the unemployment benefit. So if you're looking to strategize, you want to be very careful on when and how you time those. So again, this is a general discussion. If you want to look at some specific timing considerations, call us. We can walk through those. I'm going to highlight here again. Think of yourself as the business owner, and you're shifting the responsibility of payment from the business to the state of Michigan. You're doing this because you as a business owner have said that you need to reserve and conserve resources. Keep that in mind when you're looking and thinking through those outside payments, bonuses, extra support, otherwise. There are a lot of questions on entity type, and this is where we're going to get a little bit technical here, but I think this is a question we've got a lot. Why this is important relates to owner or self-employed, but I'm going to flip over to Andrew here and kind of do some considerations on the entity type as it relates to unemployment.
Hey, gentlemen, if you don't mind, let me jump in real quick. Can you hear me okay?
Yes.
Mm-hmm. All right. So one of the folks on the line here wanted us to remind everyone that when employees go to file for unemployment, they're going to need to know the employer's federal ID number and their unemployment employer account number. And all that information, it can be provided on a notice. So I will type in the chat window here, form UIA 1711. And that's an unemployment compensation notice to employees. And that's where the employee will have all the info they need to take and file this online. So I'll type that in the chat window. Thank you.
Thanks, Jeff. Regarding the entity types, what's important to note is the business owner or members taking wages is going to be how your entity is set up. Is it an LLC taxed as a partnership, or is it an LLC taxed as an S Corp? If it's taxed in either of those cases, you're not going to be taxed for the state unemployment. So you would not be able to submit a claim. If the entity is taxed as an S Corp, then you would be able to take unemployment or submit an unemployment claim. Same with the C Corp.
So Andrew, to jump in here on that, just to, again, this is where I'm going to highlight that there's a difference between federal and state. So for state purposes, there is only partnerships or corporations. They don't have this S Corp thing that's out there. They just have partnerships or corporations. At the federal level, there is corporations or S corporations, which are pass-through corporations. There's partnerships, there's more designations. So when you're looking at unemployment, work over and step through is what are you for within the state of Michigan? If you're a partnership, and a partnership includes limited liability company or LLC. So LLC, LLP, LP, PLLC, or an individual, you historically have not paid in to unemployment, therefore you don't get it back and you can't claim it. If you are a corporation, which would qualify either as a tax-paying corporation, so a C corporation for federal purposes, or an S corporation, then you have been paying into unemployment, and even as the owner, you can claim unemployment. Typically, an old wisdom would tell you, you don't claim unemployment on yourself because it's just a timing difference. As the employer, you're just going to end up paying it later. However, given the circumstances of where you may not be hit at this as an ongoing cost, you may consider it. I'm going to table that thought until we get a little later on another potential. But as a corporation or an employee of a corporation, even if you are the owner, there is the potential for you to take unemployment. So don't just write yourself off that I own the business, therefore I can't take it. Think through it and think through your specific guidance and talk with us. But that's just the general. Andrew, do you have any other thoughts or comments you want to think through on that?
One thing that we did talk about is, once you determine kind of you as the owner and your relationship with the entity type, it might be smarter to, use the Families First Relief Response Act sick time instead of filing an unemployment claim on yourself.
Well, that was a fantastic segue, Andrew. So thank you for that. It's almost like it was planned, which it wasn't. But so again, there's unemployment. I'm going to kind of summarize that conclusion of doing what's right for the company. Go through the process, make the determination. If as a business you need to lay off your employees because you don't have the foreseeable work here, go through that process. The mechanism is there. The benefit of unemployment is it's severing that relationship and that obligation and those liabilities and shifting them from the business over to the state. There is now this emergency paid sick leave. This is a federal thing, not a state thing, a federal. We talked about this. We highlighted this last call. I'm going to spend some more time here now talking about this. This is something that is very new. We're still all trying to figure it out. Couple important things. So it does not apply if an employee is laid off. So read between the lines there that keep in mind that FMLA does not apply to non-employees. An employee that has been laid off is no longer an employee currently. Talk to your attorney. Next, it's from what we can see, riding on the chassis, if you will, of the FMLA. FMLA is meant for the employee, not the employer. So it's written in the context of what an employer must do. It's not what it gets to do, it must do. Now there's some caveats and some benefits that may come later, but first and foremost, you have to understand that this requirement is written from the view of what an employer has to do. A couple things within that, you're not allowed to discriminate. It offers protection and protective classes, so just be aware of what it does do. There are certain protections for employers less than 25, and there's certain protections for employers less than 50. So it's good to understand what those protections are and what they aren't. Currently, the emergency paid sick leave is a 2-week benefit. So you'll see guidance out there, and it does contradict itself, but there are some that say 10 days, some that say 80 hours. It's based on hours in the actual underlying guidance, but it's intended for a 2-week period. So the normal assumption then is, for a salaried or for a normal hour work week is 40 per week, therefore 80 total for 2 weeks. Where the 10-day comes in is it's 5 business days. So understand that the underlying requirement there is a week. So if it takes 6 days 2 6 days is 12. It's really designed of what the normal is for that employee for a week, the first and second week that they're claiming under sick time. Know that both the Senate and the House, the phase 3 proposals that are out there, both of them currently do have extenders on this from this 2-week period. I anticipate that they're going to be in there. It's not known. I've tried to read through the phase 3 proposals, and they're changing so quickly that it's just impossible to even keep up with it right now until they actually do sign it. Who knows? Maybe they've even passed something during this phone call or during this call. Why I bring that up now is it's important to hear that there's likely are going to extend it beyond the 2 weeks, but as of right now, it is a 2-week requirement and also a 2-week benefit. Part-time is eligible for this, and so it's not just a full-time consideration. What it gets to and what it looks at is what is the employee would they have normally been paid during the 2-week period that they've requested the FMLA leave. So if you have posted job schedules, that is what they're requesting off. If they have the normal, so if an employee works Monday through Wednesday, 8 hours a day, it is the normal Monday through Wednesday, 8 hours a day. It goes to what they would have been scheduled during the 2-week period that they request off. It's based on sick leave. So it's what the underlying guidance basically says is you as an employer effectively are depositing that 80 hours or that 2 weeks, that normal 2-week earning period or work period into a sick bank. And so it's going to follow and feel like sick time. So all the benefits and the requirements that come along with sick are going to follow through that. So it's not like it's a new thing out there. So as an employer, if you've provided sick time, it's the same consideration. If you haven't provided sick time, it's going to feel like what would normally be required for sick time. And I say that as to the nature of whether it's taxable or not taxable, and is it subject to FUTA and SUTA and all those for the detailed accountants in the call here. It's not subjected to overtime. That's a consideration as well. A key thing here is of who qualifies. The first thing that changed here, or not the first thing, a big change here was this on Monday was the stay safe, stay home mandate. So before that mandate, who qualified would have been someone that has COVID or is seeking and being advised by a doctor to be self-isolating. So as an employer, you could require, let's say a doctor's note, something along those lines. Now there's the first category here that says the employee is subject to a federal, state, or local quarantine or isolation order related to COVID-19. It's our understanding that the state of Michigan mandate to be home is that mandate. And so that's shifted now into saying that the FMLA, this 2-week period, will likely apply for that. Again, it is written from the requirement that an employer must provide and allow for that FMLA leave. A couple little nuances within that. No good deed goes unpunished. Any leave, any paid leave generously provided by an employer before the law is effective cannot be credited against the employee's paid leave entitlement. It's just after the effective date. And that's where the key, how they get this, the requirement is important. So here's a little nuance within the effective date. You know, and I'm going to allude on this nuance here is it's unknown right now whether this is effective or not. Here's why. So the president signed this into law on March 18th. Within the legislation, it says it will have an effective date no greater or no more than 15 days from signing when he signed it, which means I can guarantee you that it's not effective before March 18th. And I can also guarantee you that it's going to be effective for anything after April 2nd. So before April 18 does not apply. After April 2nd, it will apply. Between April 18 and April 2nd, it maybe will apply. Now, unfortunately, that's the period we all find ourselves in right now. I can't give you definitive guidance. Talk with your attorney. They're probably going to say the same thing. I hope. If they tell us differently, let us know. But that it is possible. As I stand here on this phone call today, there has been no guidance that has been said that is effective before today. But understand that there's a chance that it will be retroactive back to the 18th. So before the 18th, no. After April 2nd, yes. Between April 18th and March 18th and April 2nd, we don't know. Conservatively assume it will be retroactive. Okay, I think the chat and the questions are pinging right now. Andrew, any questions related to that have come up?
Yeah, Kate had a good one. In regards to someone who is able to work from home, can they still apply for the sick wages under this act?
This is going to get into the law is written based on the requirement that an employee has the right to request time off. So let's think of this absent COVID-19. If you had an employee that asked for sick time under FMLA, so this would have applied if you were larger than 50 employer, and someone gave you an FMLA leave, you would say they're requesting for the right to leave. What they do during that time, as long as they have provided the requirements, is up to them. It's not you as an employer, it's their right to do it. Your right as an employer is to know that they're going and doing sick things or doing things that what they said they are. If they work during that time, that's not a requirement. The employer cannot require them to work, I guess is all that we're going to be able to say. Is it's written on the chassis of the FMLA, which says it's what an employer has to do. They have to provide this sick time. What the employee does is not up to the employer's discretion. That's where there's opportunity. I'm going to just leave it right there, and we're going to go through a little bit later, but I'm going to, as a general observation, say it's from the viewpoint of what you have to do. Andrew, any other questions? I'm going to get to some of the opportunities here in a second, and that opportunity is going to relate to I think some smaller businesses as well as the self-employed. So don't, if you're hanging on for where that's coming from, that's going to come yet. So, but
yeah, there is one. How about what's the obligation for the employer to notify employees of this policy available?
That is one. I'm doing my best not to punt on questions and not answer, but I don't know that answer and I can't answer that. That's where I would say I would call for the employer law folks in the Traverse City to do one of these, and or I would tell you to call them specifically. Unfortunately, I don't know that. Okay, so let's talk about the credit. So I can't tell you how important it is. The emergency paid sick leave is on the chassis of the FMLA, which is what is the viewpoint of what is required to be paid. Think of that, assume that, work through it. Now, in parallel with that, not the same time, but not because, or not as part of that same code, in parallel, separate part of the code, different section that says there is a credit available for employers that have less than 50 employees, that they will get a credit back for the wages paid under this requirement. If you have more than 50 employees, that's going to be, that's tough. You're being mandated to follow off on this requirement and not getting the credit. Below 50 employees, there is a credit that is available. This is where those opportunities come. And so be aware. So that credit we're working through, there is no direct guidance out there other than the only guidance that's out there specifically is that this credit will apply against Section 3111A employer portion of Social Security taxes. Lots of eyes rolling, lots of unknown there. What that's basically saying is we know for sure that it will come against as a credit against the business portion or employer portion of Social Security. Any amounts that are paid above that will get treated as a refundable credit back. Why this is important? So let's walk through. Let's say you have $1,000 of wages. That $1,000 is subjected to 7.65% Social Security taxes. Actually, it's we'll go with 7.65. So $76. So continuing on that specific example, you're going to pay the employee out $1,000, and right when you get that credit, you're going to take back $76. So you're still out those dollars in between. Those dollars as an employee or employer, you would then apply as part of your quarterly 941 payment. For those of you that are in integrated, that's something that we're going to be working with you on. But you would apply for it on your quarterly payment to get that back. No formal guidance have been issued on this. No practical guidance. No forms have been issued to this point. We anticipate, and we've seen unofficial guidance that says the employer will have the ability to offset all of the federal withholding amounts. So not just the employee portion or employer portion, but all of it. That's not official. That is anticipated. There's also anticipated, not official guidance. We have seen some unofficial guidance that will point to this, that there is going to be an early or an expedited way to get that overage payment back to you. And it's going to be treated as if you overpaid the payment. So let's talk worst case scenario. And what you should assume for right now is that you're going to put the dollars out today, that you're not going to get the dollars back until July 15th at best case, because that's where you're going to you're going to file on the 941. You're going to get the refund back after they give it to you. So the 941 is filed and paid in, let's say, July 15th. Then they give you the refund back. That's a long time. There will be a float. We are hoping, and all indications are showing, that there will be expedited ways to get those, but just be aware that it's there, that that float will be there, and you're going to have to think of that. That's where I do an asterisk and a star and point up to the disaster relief loans. So there's an obligation. That's what you need to hear. There is a credit that is available if it comes to that. This is where there is opportunity, but I'm going to say there's opportunity with caution. Where I see this really applying to are going to be the single S corporations or the self-employed individual that's going to follow into this, that you're making the decision that says, you know what, owner of the business decides to use or to tell or have the employee of the business put in an FMLA claim against the employer, who happen to be one and the same, just wearing different hats, because you can feel comfortable the risk that's going to come associate with that. So before you consider whether or not you're going to go seek unemployment, or before you assume because you're self-employed that you don't get unemployment, know that there are opportunities out there. It's going to take walking through the cycles, and it's going to take walking through the process to get it. So it's not an immediate payback, but it's a long-term payback. This is actually could result in an overall benefit for some smaller employers and for the self-employed. They got to make it through that cash flow period, but if they do, there could be a benefit. So again, so here's where it's all these years where I for one have been preaching to those that are S corporations in the audience, and I've been telling you need to have a reasonable wage, and we've been trying to figure out how do we make it lower, higher, lower. Generally, people err towards the lower. Here's where you want to have it higher. In all those times that we've been saying, well, we need to have something reasonable. This is a benefit for having had a reasonable wage, because it's going to go back and look at historical information, and that's what you're going to be able to consider as part of this credit. So there's a chance, again, that as a single employee S corporation, or even a small employee base that you feel pretty comfortable with, or if you're self-employed, that there's a chance that you're going to get your wages paid for during this period. You have to hit cash flow. It's intended to be benefits for you, so you don't have to feel bad about it. It's intended that way because they want to have the government is trying to get funds to you. So that's what that's there for. Same goes for the self-employment. All these years that we've been saying if you're on a Schedule C or you're self-employed, we've been telling you as the accountants that, hey, yes, we can get you these tax deductions, but do you really want them? And it certainly helps lower that immediate tax deduction or that tax liability. But we've been saying you should still have a reasonable net income. Here's where there's a benefit of having had a historical reasonable net income, because that is what the IRS is going to look to determine the amount of a credit available. So for those of you that are on the call that are self-employed, there is a credit available, and it is a way to get unemployment. Call us for your specific example, and we can walk through those because it is going to make a difference for you. Okay. Any questions before I go to the kind of summaries?
I just wanted to piggyback on a comment you had about the 941, the processing of that. I'm writing it out in the chat for everyone, but the 941 is actually due on the last day of the month on a quarter, so July 31st, and only after that point, the IRS would then begin to process refunds, which can take, we see, at a minimum of 6 to 8 weeks to get back to someone. So, in best case scenario, we're going to hear about an accelerated way that they will get that back to you, but it is a risk that it could take a lot longer.
Okay. So I'm going to kind of come back and just pull this all back together again. For examples like that, there are opportunities here. The whole point of this is not to take advantage of these opportunities. Those opportunities do exist, are going to need some thoughts and to work its way through. But ultimately, do what's right for your company. You know it. You got that gut feel. If you need the numbers and you need us to run a financial analysis for you, we can. But my guess is you know it. Are you going to get hit from this? And do what's right for the company. If that means laying employees off, lay them off. If it means taking the sick time, take the sick time. But do what's right for the company in the long term. Keep in mind the different programs. There's federal versus state. There's within the federal government, there's different sides. There's the DOL, there's the the state, the SBA. Keep those different programs in mind as it compares to the state. The state is state unemployment, the state benefits, the state rewards. First and foremost, know that this is an anticipated result. All these programs are out there are very in infancy, but they were anticipated. That's why they were put in there. Phase one, you didn't hear anyone talking about phase one stimulus package because it was meant to bolster behind the scenes for these type of things that you are now just thinking about. That was what was behind there. The dollars went to the banks. The dollars went to the unemployment agencies to anticipate. So it was anticipated. It wasn't planned for, it was anticipated. Communicate early, communicate often. We're all in this together. The programs are there. Think through it, work through it. Talk, communicate. And then we're available. We're here to talk through these, to work through these. Your bankers are available. Your attorneys are available. Your counselors are available. We're here. Call us, call the numbers, call your emails, talk to us on an individual. So we focus. And again, I'm going to pull and circle back. Everything that we said here today was generic and general in nature, and don't apply it to your specific circumstances. Call us and we can talk through your specific circumstances that goes through. Some great resources that are out there. There's the state of Michigan website. That's that's michigan.gov. And then you can do a /coronavirus. They have fantastic information that's out there. The SBA website is actually quite informative and good. Our website, we're doing as best we can to keep information up there that would be relevant to what you're looking at. It is going to be primarily Michigan-based at this point because that's where a lot of our clients, our bulk of them are right now. So just be aware that it is looking at primarily federal and state, but our website has information as well. And then ultimately, in the website address for ours is entrustcpa.us/ hold on, I should know this, I apologize. entrustcpa.us/ COVID, COVID-19. And the same can be said for integratedpayroll.us/COVID-19. go seek those. And then call or email us. We're here and we want to help to the extent we can. If you work with me, you have my cell phone number. You have our information. We're available at all times right now. We get that it's a difficult time. Call us. Think through it. We want to be here to help. Last opportunity here for questions or chat or anything. Okay, one of the questions we had last time was the observation was we shut this down too quickly because people still wanted to ask questions. This is where I'm going to get up now because I don't know how to turn it off without shutting it down. So you're just going to see a blank area. So feel free to keep emailing or texting questions for a little bit. We will probably shut this down here in about maybe 5-10 minutes. So over the next 5-10 minutes, feel free to put questions out there in the Q&A or the chat. Thank you everyone for coming and attending. We greatly appreciate everything you are for us, and don't underestimate the importance that you play for us as well. So thank you everyone for coming.
So everyone, we did have a question come in that is quite relevant, and that is, how do we inform the IRS that our employees are working or receiving pay under the emergency sick leave or emergency family leave? You know, what we're doing as a payroll processor, integrated payroll services, is we are setting up specific pay types called emergency sick leave or emergency family leave. And those pay types will be used to track the hours or prorated salaries of workers that qualify. We suspect that in order to reconcile this credit on the quarterly tax filing, that the IRS may or may not, but they most likely will require some additional report to be attached or sent in some manner to help reconcile the credit to the hours worked. That's a little bit of speculation, but at least we're setting up our systems behind the scenes to track everything as precisely as possible.
Yeah, just
I'll add one note. I would also tell you, anticipate you will get notices from the governments. You're going to get notices that the state of Michigan, that the employees are on unemployment, and you'll have your rights to appeal or not. You will get notices from the federal government on 941s or from unemployment or from state, so don't assume that those notices are bad or wrong. Just pass them on to your accountant, pass them on to us, and we'll go through them. Some will require immediate responses. Some will be more generic and just bulk. But just assume and know that you will get notices in the coming months. So thank you again, everyone.